All right. And then I am going to, I believe we're going to mute some. I have not, I hear a little background noise. I think I see Miss Barbara Cooper here.
Yes, I'm here.
All right.
I'm on my phone.
Okay. Welcome to the call. All right. All righty. Trying to see where the background noise is coming from. And then we will unmute this baby in just a minute. Well, I'd rather you guys just pay attention and to your background and mute if you have noise in the background. But then this is a comfortable setting in which you can interject and you can ask questions as we move forward. So I want to welcome you to Team Vision Call. I'm very excited about what we're doing. Right now we are preparing for, excuse me, one moment. Somebody got carried away with the ball game at my house. All right. We are preparing ourselves for our upcoming training with Mr. Charles Thomas, who will be sharing with us investments, information, and education. We wanted to make sure that when you come to the meeting that you will have some type of basis or understanding of investments. So I am taking this opportunity every Tuesday night to share a little piece of basic investment education, which is investment terminology and different ways of investing and so forth. Listen, what you have to understand about investing is this is a huge world, and it has huge information that could lead from one information to another, to another, to another. But what we do in My Econ is we want to give you a basic information so that you will be able to carry on at whatever your desire is. We always want everybody to understand that you do not have to be a trader, an investment trader, to actually invest your money or to understand something about the fact that if you're going to create wealth or you're going to create financial freedom, then you can go ahead and do that. And you can do that with comfortably by having some basic education. Now, in some people's, when you say, well, listen, I want to learn investments, or you say you're going to teach about investing, people really get an antenna going and says, yes, I want to know about investing. But here's what happens a lot of times is people will think that they are ready to become investors, and they are really not ready to become investors. And here's why. Because in order to move to the point of investing, you will have to address other areas of your financial matters in order for you to prepare to invest. Some of us are farther down the road than others, but some of us are right there in the middle, and some of us are just getting started. But either way it goes, you will need basic financial knowledge in order to get to the point of creating passive income through areas of investing. Some of that knowledge is actually going to be, or I'm not going to say some, I'm going to say all of the knowledge, because in order to be well-rounded in financial matters, we've got to know everything from tax education. How does taxes affect us, our individual taxes? How would taxes affect us when it comes to investing our money? We will have to understand how to keep the money that we make on our job from day to day, from week to week, from month to month, from year to year. We will have to understand the W-4 form and how to keep that money. We will have to get an understanding of how to manage our debt. And that is an issue, an age-old issue, because people think that they know how to manage debt and they know how to create it. They know all the games that it comes down to debt and management, and they've got all the little hustle going on to get the debt that they need and earn the income that they need. And then some people even think that they know about credit. But I know that in these areas, These are the major areas when it comes to your money. You need to know how to keep it through your W-4. You need to know how taxes affect you. You need to know how to budget that money, which is the key to everything. You're going to need to know how to eliminate your debt. You're going to need to understand credit, how credit affects you, and how to take all of these areas right here, create a positive cash flow from there, and then move to a point of where you can comfortably make the type of investments you need to create passive income. So our endeavor is now we have moved all through the year, and in our My Econ training is repetitive. We are always teaching the same thing. Generally, most of us are teaching it the same word, or you may have something that's a little similar, a little easier for you to understand. But this is why, as associates, you are still involved from week to week, from month to month. You should attend your trainings because you can never have enough information when it comes to your personal finances and how to create a positive cash flow and how to build your business from there. So we are moving to the close of the year of 2017, and we are actually into the investment education, because those of you who have come on board anywhere from January to now, you should already been taking action to create positive cash flow in one of those ways that I have recently discussed. Now, I thought about something that I was asked as we go into this part, or part 2 of our Invest Smart 101. I thought about something. A gentleman came to me one time and he said, Clarissa, can you teach me how to invest? You know, I really want to know how to invest. And so I began to interview him and say, okay, tell me what you have going on. Well, I found out that gentleman was actually getting ready to go bankrupt. And he actually didn't have a clue on how to manage his money. And he was thinking, I'm going to become this big investment guru, and come out when he was really, simply put, he was not ready for it. So we're going to continue to do the cycle of training. We're going to continue to empower leader after leader to train those people that you talk to train your own family on how you can create positive cash flow and take that positive cash flow and create assets that will create wealth for you and create financial freedom. Okay. So last week, we did some basic knowledge. If you did not get the video from last week, just ask your leader, or I do have it on my YouTube. You can go and look it up on YouTube, part 1, and you can go back and look at the foundation we laid. Tonight, we want to talk about diversified funds. I got excited just learning the information. And listen, what I've learned is real wisdom is not just learning, but real wisdom is when you apply what you learned. So even more as I have to learn to teach and to train you guys, it excites me and initiates a whole different strategy for the way that I continue to build my financial freedom. Okay, so now let's take a look. Tonight we want to talk about the advantages of diversified funds, and I'm making all of these trainings in parts so they can be, hopefully they can be simple for you. You have the opportunity on here at any time to address any question through your chat. If you're on mute, you have an opportunity to take yourself off mute, because I muted out everyone because I didn't know where the noise was coming from. But you can pull yourself off mute and ask a question, okay? Or you can raise your hand, go in the chat box, and it will let me know that I need to go and see what comment or question you are making. I'm also going to ask you that as you learn something that just grabs you, empowers you, go ahead and post that in the group me, as well as I want more, okay? And that's going to let the other associates know that we are in a learning environment, and perhaps they will join in too one day. Okay, so let's talk about the advantages of diversified funds. So we've already talked about investing and just how that works, and the different the different areas of investing. We talked last week about compound interest and simple interest and what the difference is and what the advantage is for compound interest, okay, investments, and the only advantages that come with simple interest investments, okay? So today we want to talk about once as we are examining and looking to make a investment portfolio, the importance of taking a look at diversifying the funds that you are investing. So let's just take a look. We're going to define this, okay? Mutual funds portfolios are examples of diversification, okay? Some of those investments will include U.S. stocks, international stocks, bonds, or mutual funds. Last week, we talked about what a stock is. We talked about what bonds are, and we're going to talk a little bit more about mutual funds on today. Okay, so a mutual fund is a company that pools money from many investors and invests the money in securities like stocks, bonds, and short-term debt, aka okay, you know what those are. The combined holdings of a mutual fund are known as its portfolio, and investors buy shares in mutual funds. So, to simply put it, that's like investing into a company, one mutual fund that has areas of investments that come from stocks in Apple. It may be stocks in health. It may be stocks in types of chemicals. It may be stocks in types of bond funds for different states. All of these may be in one type of investment, okay? And if that is so, then that is called a mutual fund, okay? And it's simply what we do as investors, we will buy shares, okay? I think the simple term for somebody like myself and somebody like you who are just parents with just everyday blow Joe, just trying to get a little understanding so we can move things forward. It's just like it's just like what it says. It's a share. It's a little chunk out of an investing a little bit into that company and expecting that company to raise capital in which we can make money off of as they are successful. Now that's my definition of it. Let me say this right now. I'm not a licensed investor. MyEcon does not sell investment products. We simply teach education, very basic investment education. So you can go to people like different specialists. I'll put it like that. I don't want to endorse anybody, but you can go to brokers, investment brokers, and you can get help. Or if you understand the terminology, you can move forward yourselves. Okay. Now let's take a look at our next slide. Okay. Now, I thought this was interesting, and I wanted you to understand or see who the three biggest mutual fund companies are. The first largest mutual fund company in the United States is BlackRock Funds, or iShares. This is a New York City-based BlackRock Incorporated. Released its first BlackRock mutual funds in 1998 in conjunction with the PNC Financial Services Group. And a deal struck because co-founder Larry Fink, and some of you guys can go look him up, had an equity dispute. And so they, with other members of the executive team, and so they created this mutual fund family, okay? This BlackRock mutual fund is actually, or was, the leader in the mortgage-backed securities, or MBS investments. And you guys know what those securities are. That's just, mortgaging homes, real estate, and this type of thing. They're also known as iShares, mortgage-backed security funds, and they were released in 2007 with plenty of fanfare. It talks about, and I don't want to go into details with that, but I do want you to know that this is one of the leading mutual funds in the country, and they make trillions of dollars in what they do, okay? Very interesting. You can go and look them up for yourself. Now, the second largest mutual fund, and all of us are probably familiar with them, and that is Vanguard. Not only is it one of the clear winners in the modern low-cost investing environments, but no provider markets as aggressively or effectively as Vanguard. You guys should have seen this on television. You see them advertising all of the time. We know their logo, and we know that, and what I found interesting is they are highly rated, right above Morningstar, American Funds, PIMCO, T. Rowe Price, and some of the familiar mutual fund companies that we are just pretty much a household name, okay? If you know anything about money or watch TV, you have seen these, okay? And the third largest mutual fund company is State Street Global Advisors. Go take a look at them, because this is the last of the big three fund families. And you want to go look in and see what fund families are. I don't want to talk about that on, don't want to get into some things that you can ask Mr. Thomas when he gets here, or you can look up on your own. Our goal is to empower you. So this is the last, and this is interesting to me because this company introduced the world first to ETF, okay? ETF and the S&P 500 SPDR ETF. And ETF just simply means exchange traded funds, okay? Those are marketable securities that track and index with commodities, bonds, and baskets of in baskets of assets, okay? So that's pretty interesting. So now that we find out about these three companies, let's take a look. This is simply to familiarize you with mutual fund companies. You got to know these are just some of the companies that you may recognize: Morningstar, Franklin Templeton Investments, T. Rowe Price, Invesco, Massachusetts Financial Services, Fidelity, Neuberger. Listen, as you study investing, and look for mutual funds, there are literally hundreds of mutual fund companies in the world, really hundreds. And what I think about here is, in most cases, when we are preparing to invest, our big question that we most of the time ask people is, we want to go to somebody and say, what should I invest in? Where should I invest my money the most? Now, just a common blow Joe like me and you, okay? Now, in looking at the fact that there are hundreds of mutual fund companies out there, do you really think that's a valid question for us to ask anymore? I mean, really, when you think about it, it's kind of tough to go out and say, just which one should I invest in? So there are some things we'll talk about next week that you can look at when it comes to finding the mutual fund companies that you would like to invest in. And you can spend days and days and days and days of trying to get an understanding. But right here, you will need to just narrow down your risk factors, what it is, the goal that you're looking for, and choose the mutual fund companies that are yielding the best in the market of investing and so forth, okay? So what do we need to know then? Here's what we need to know. Years ago, there was a recession, a huge recession, wasn't it? You guys should remember the recession. People lost their homes. People lost when it came to their retirement funds, they lost their retirement funds. And listen, you know what? People literally lost their minds. Some people actually killed themselves because the way that they had invested, they had put everything into one company. Again, we're still talking about diversification. We're talking about, when you talk about diversified, you're talking about many, okay? You're talking about many. And so the first thing that we have heard is in investing our money, we always hear this. It says, don't put all your eggs in one basket, okay? Don't put all of your eggs in one basket. You know, there's a disadvantage to putting all of your eggs in one basket. But what does that mean? Okay, what does that mean to us? It means that an investment strategy, or it is an investment strategy that relies on income and returns from one stock. So like people who put all of their money into their 401k plan on their job, whatever they have on their job, they put all of their money into that one thing. That strategy relies only on the stocks that come from one type of investment. It could not even be their job. It could be where everybody is investing. You might just invest everything you have into a business, because business is also a type of investment, because it yields returns, residual income over and over, and creates a legacy that you leave to your family over time, that you can continue to create old money and everybody can be wealthy from it. So, but if you tie up everything into one basket, you're using a strategy that's going to rely on income and returns from that one stock or that one investment. Okay, so that's what it means when you hear don't put all your eggs in one basket. Everybody good with that? Okay, now if the stock has high gains, this is what happens when we put everything into one area of investment. We're just saying stock, okay? For an example, if that stock has high gains, you win. But if the stock loses its value, you lose. You lose everything. And so some people are very reliable on, I pick on this because I'm actually around educators. And then there are some people who work at certain plants. And when they do, they put all of their trust into one area of investments with that particular place where you work. And when it loses, you lose. And that's what happened during the recession, is that many people had used this strategy because they were looking for stable funds. They were looking for a stable means. They were not risk takers. They didn't want to take many risks, and they put it there, left it there for a long time, and then everything they had was gone. Okay, diversified portfolio occurs when you have many different types of investments. Okay, so those investments can include stocks, international stocks, bonds, mutual funds, or other investment options. I'm gonna just give you a little picture of what we went over last week. That is a part of other investment options. Okay, so I'm just showing you some graphics here of stocks and bonds and mutual funds, and then look at all the types of mutual funds that you have to your advantage to choose from. Okay, when we talk about other investments, we're talking about, we got 4 classes of investment, or 4 categories of major investments. That's going to be your cash equivalents. Again, you will get the opportunity to go back and watch the other video, or you can go look this up. You have your cash equivalents, you have your bonds, your stocks, and you have your private investments. There are some people that diversify their funds through types of insurance and real estate, and things like real assets like farmland, property, metal, livestock. These things are included in creating a diversified portfolio. And certainly last but definitely not least, and which is recommended, I think if you get Investment for Dummies, one of the number 1 recommended investments is to do a business or to own a business. Okay, I see where Scott says stocks are high risk, higher payoff, but you lose more. Mutual funds, more secure shields you against loss more, but the return is not higher, thus more conservative. Okay, so we'll talk about that. Believe it or not, Scott, I got a little information about that. Okay, so let's take a look. Let's look at the advantages, okay, and diversified portfolio. Exactly. Risk. The first advantage would be specifically the risk. Portfolio diversification may reduce your long-term risk. Okay, let's look at the example. If you purchase a share of stock for $50, you sell that share for $35, you lose, right? You lost. But if you purchase 2 shares of stock, you purchase one for $50, sell it for $35, you purchase the other for $10 and sell it for $25, you eliminate loss through diversification. Okay, so If one goes up, basically, and the other one goes down, then perhaps you haven't lost everything. Okay. The next advantage is higher returns. Diversified portfolio could yield a higher return in the long run. Let's take a look at this example, okay? And this actually came from the popular USA Today, okay? For an example, between January 1 and 2001 and November 30th, 2011, the Standard & Poor's 500 Fund Index returned a 1.4% gain. Investors with diversified portfolios returned an average of 5.4% gain during the same time. Okay, so higher returns from diversification tends to be seen when there is a long-term advantage. However, according to financial experts in investing, they also let us know it's not always the case, but it is the best case scenario that can happen when you have diversified or have a diversified portfolio. Okay, and so y'all take down all kind of notes if you got to ask questions when I open up the lines. Okay, the next advantage is your adjustments. An investor can adjust their investment mix. So more risky when you're young, more more stable. There should have been an S on there. More stable when you are older or reach retirement. What does that mean? That says that I can have a mixture of everything that I talked about, everything that we've just seen, that the classes of investments that we could have, the different types that are within a mutual fund. You will have like 100% to invest. So over time, you can say, I want 90% of my money, I want to go into stocks. I want only 10% in bonds because bonds is a more stable investment area. Okay, you might do that when you're young. You might even say, I want all 100% into this stock. Why? Because I'm 21 years old, I'm 25 years old. I got time to lose it. I got time to make other investment choices and make it back. Then as you grow older, you might start saying, well, I'm around 40 years old. I got 90% going into stocks. I've taken a look at what my stocks and how they're growing and, you know, what the Dow looks like, all of these kind of things. And I better go ahead and drop that from 90% and I'm going to put 80% here and I'm going to put 20% over here. And then with time, as you grow closer to retirement, you might say, well, I don't have time to lose not $1. So I'm going to use this pyramid, okay? Adjustment when it comes to investing. We showed you last week a pyramid where and what was your lower risk products when it comes to investing and what is your higher risk products. And so you might begin to move a mixture of products and say, well, I don't want to invest into that anymore, or I want to take a little out of this mutual fund and I've seen a farmland and I want to go ahead and buy me some property. I want to go ahead and set up me some real estate because that seems like that's going to be more stable, because if I buy me a trailer park or if I buy me an apartment complex, then my money is always coming in. So again, that's up to you. There's no recommendation on that. This is just thought as you pray, as you're looking at your funds, as you wanted to create wealth, you get the opportunity to do that. And what is recommended is to create a diversified portfolio. Then finally, balance. Okay, the next advantage is balance. Behavioral portfolio theory teaches investments either protect from loss or provide high growth potential. Diversified portfolios have a higher percentage of low risk, income, and value investments, okay, which is the bottom line to the advantages that we have when we diversify our funds, okay? To me, that just means spread out, spread the money out. Learn your risk factor, put your desire out there on the line, and then create a portfolio. And listen, you guys, with every other tool that we use in MyEcon. You know, when I think about this, I think about how we teach you guys how to write your vision. We teach you goal setting. We teach you goal planning. We give you the opportunity to have a personal cash flow plan. Do you know that all of that is factored into your choices of investing? And it is so important that you need to aggressively get those things done, your cash flow strategies, so that you can get to this point to where you can have fun with this. This is not to give us a headache. Oh my goodness. At first, when I started to go after this, I had a headache just anybody said investing, because that's just not something I even, never grew up with. And in most cases, we don't understand this because we did not grow up with this knowledge. So the bottom line is, and see, I told you I want to keep these short so that we can have a powwow and you don't get overloaded on information. The bottom line is, MyEcon wants you to understand enough investment education to make wiser choices about your future, and by all means, help you become an investor of some kind so you will experience financial freedom and wealth. Okay, so I'm going to unmute all of you, and if you have any background noise.
6:30. It was 6:30.
Okay. All right. If you have any background noise, lower it at this point. So now I'm going to, with that being said, are there any questions or comments? Let's discuss whatever it is that you need to discuss through diversifying your funds. Any questions? Any questions or comments? Well, I have a question. Are most of us positioning ourselves, are you positioning yourself to truly become an investor, and how are you doing that? Don't everybody talk at the same time, or I'm going to have to call your number.
Ms. Pace, can you hear me?
Yes, I can.
This is Latresa. I'm positioning myself to become an investor. I'm using Acorn at the moment to start investing. That's just for me right now. That's just to get me started. But as my investment grow with Acorn, I'll be looking into using that investment as it grows to move that investment over to something bigger once it get to a certain amount. I'm looking to move that roll it over into a more aggressive investment.
Okay, and if you take a look at the mutual funds that Acorn offers, they have some great products. So, you may not just to say move out of Acorn, but you might want to invest within an investment, because as you learn and study their products that they have, their investment products they have some very decent mutual funds that you can go inside and take a look at, and increase what you are giving, so that in the long run you'll have the amount that you need to retire on. Well, good job, Latresa. All right.
All right.
And listen, I like you saying I got started, because the one thing about it is, if we never get started, we never get started. It's something about self-gratification. I was studying today about ways to eliminate debt, okay? And one of the ways in which we use our debt elimination is about concentration from one debt to the next. Well, there's another one, I forgot what you call it, but there's another one where you just concentrate on the smaller debt that you have. And the reason you concentrate on the very small balances is so you can get a lot of self-gratification as you pay off a $200 balance, a $400 balance, $500 balance. Then you can attack that $5,000 balance. So I said that to say, even with investing, if you are investing as low as $5 a month, at least you have gotten started, and there are investment options out there that you can search for where you can put $25 in and get started to say, at least I know I'm an investor and I'm moving things forward. But if you always keep watching, you always keep coming up with the problem when the solution is before you, you will never break the bondage that you are in, because you are not doing anything. Bottom line, you're just not doing anything. Okay. Thank you, Teresa. Someone else? I think I see.
Nathan, can you hear me?
Go ahead, Nathan. Who's that? Barbara.
I think it was me and someone else. This Nathan.
Okay, go ahead, Nathan.
I started mine with that Health Sciences Fund.
Yes.
Started a Roth IRA.
Mm-hmm.
But I noticed that the majority of it is in stocks. It's like mainly all stocks, but it's done pretty well.
Mm-hmm.
It started out kind of slow, but it is doing a lot better now. And I do the $100 a month there, and therefore I got started.
Okay, good deal. Because you had to put in at least $1,000 on that. And the last time I saw the rate of return on that, it was at like 22% interest rate. So yeah, it's been making a lot of money because of the health industry and the need now. You know, we got to have health insurance, and so of course looks like a decent product to invest in. Okay, all right, K. Scott Wingfield, I saw your hand up. Go right ahead.
No, I was going to ask about the Acorns. I'm investing in it. I mean, it's a good way to start. I'm recommending it to younger people and people who have the excuse not to invest due to the fact that it does it for you, and it has it's kind of like if you're working. And when I was employed in my last job in my 401k, since the deductions and everything were made prior to me receiving my check, I kind of didn't miss it. So Acorns is a good thing for someone that might not have a 401k or something like that yet, and to start small. And also, when we're dealing with mutual funds and things of that nature, we also have to be aware before we start investing of our age, do we not? Because at a certain age, as I was explaining to someone one time, like with my daughter or someone younger, they might, when they diversify in their portfolio, they might be able to take more risk in stock because they have more time to recover from a loss. But as you get closer to retirement age, like me or someone around my age, you have to start taking into consideration, could you or could you not recover from that loss if you were to lose it? So a lot of times you have to be a little bit more conservative in your investments. And
again, that's going to depend on the individual. That's what we were saying. At some point, let me go back to that slide. Let me go back to that slide since you mentioned that. Right here, having the opportunity to make those adjustments. That's what we get out of having diversified funds, is because we can make those adjustments. Now, would I say you have to? If you look at major investors with hedge funds and all this, I mean, these investment gurus, in their older age, but they got the money to do it, and they still are making investment, angel investors and all this kind of stuff. They're still taking their money, some of them at an older age, and making some plunges. So that will be contingent upon your need, the amount of money you have to do it with, and your emotional side. Because, I forgot to include that in there. Investing can be emotional. And you see it is because you got people who will literally cry and go into depression because they lose thousands of dollars. And one thing about it, when the market began to crash, the market began to crash on the mortgaging. I was with a broker, and I was doing mortgages at the time. And so this guy was so unlearned till he was like, Miss Pace, he sent me a notice. He's like, look, everything's crashing. And he told me that this certain company was actually going to be taking over the world doing mortgages, and we were not going to be able to get in the market, and you know, was going to lose money. He wasn't going to be able to finance homes anymore. So I'm sitting there going, dude, wait on it. Because when it comes to growing your investments, you got to know that some things are never going to die. And I know people going to keep buying homes. I don't care how broke they seem. You know, I deal with people in their credit, and people, they going to get their credit together to go buy a house, whether they lose it in 5 years or 2 years or not. You still got people that are mentally challenged when it comes to finances, and when it comes to making balance, and the fact that your credit is not just to go and buy a house. Okay. And so that's all they want to do. And I'm sitting here going, there's some people that's still there's a lot of people who don't care nothing about anything, doing credit for anything else other than buying a house. You're not going to lose. If you give it a moment, this might fail and some may lose now, but the mortgage industry is going to survive. It's going to come up. Well, needless to say, I could not convince that joker not to go out of business with mortgaging. He still went out of business, okay? Which is, you know, one reason. And I switched companies, but, you know, later I just stopped doing it. But it wasn't because I didn't feel like the market was still stand. And as it stands, the very company that was bragging about taking over little mortgaging companies and mortgage brokers and don't run us out of business, they went out of business. Okay. So they're not on the top dollar no more when it comes to mortgaging. So, you know, you just got to know this thing is emotional. This thing is personal when it comes to investing, and the good news is that we're able to do something. Okay. Okay. What about anybody else? Comment. What are you doing to move towards your investing?
It's Barbara.
Okay. Go right ahead.
I'm in the 401k at work at my job at the hospital. And
Good.
yes, in the Acorn, I'm gonna try to put extra in there since I don't have a cable bill anymore. So the money I was paying for my cable bill, I'm gonna try to get in my Acorn.
Okay, good deal. See, you guys, you know what Barbara is doing is wise, because Barbara's over 50 and she's single. And so she's found a way. She's not a high dollar earner on her job, but she found a way to where she can maneuver her expenses and focus or make a priority to take those funds and to put them in investments. On her job, she investing in a 401k, and of course, generally those are matched in some kind of way. And so what's recommended in our PCP plan is that you max out when it comes to the 401k plan. And max out just simply means if you can put in up to 10% of your income, go ahead and put in up to 10% so that those dollars can actually be matched. And then she'll have another investment option going on because she's going to invest her money in Acorn. Good job. All right. And Latrice said, way to go, Barbara. All right. Anyone else like to share? You have a question or a comment on the training on tonight?
Can you hear me?
Okay.
Hello?
Okay, yes, go right ahead.
Hi, this is Latonya. Hello, Clarissa.
Yes, hey, how are you?
Okay. Hey there. So I have a question on the 401k. It's offered on my job. I work for the school district, but I know in my heart of hearts that I won't be there long. Should I get in it, knowing I'm not, because it's not going to follow me, or should I just go with the Acorn? I mean, I think I kind of answered the question already, but
okay, well, actually,
I'm just wondering if I'm not going to be there.
Okay, well, most of those funds you can roll them over, and if you have the option and can invest right now, I would invest right now. You know, in something, I would invest. And if they're matching right now, that's actually to your advantage, because the longer you wait to invest, you lose money. So if you have the option to put in a 401k, that particular product may not follow you, but you will have funds already, which if they're growing and they're matching it, like my job used to match mine 100%, then I've got more money. If I was putting in 10, they putting in 10, now I got $20 that I can roll over. And if you wanted to roll over in some type, I don't want to just keep saying Acorn, you guys, because you got other mutual funds out there. But and I can't do that, and you can't either. But if you want to move it over into an investment, a mutual fund, IRA, or so forth, then you got more money in the long run to actually roll over into that account. Because you can roll over and it's not taxed. It's only taxed when you take it all out.
Ms. Space?
Yes.
Okay.
Yes.
No, I just wanted to validate what you were saying because that happened to me. You do have an option of rolling it over into a IRA or something like that, and it's make it portable to take it with you.
Yeah, you can. All right, I think
Your 401k, and if you should change your job.
Right, and see, you can find all of that. Thank you, Mary. You can find all of that information out by you having this knowledge. You can sit down with HR and your representative and ask some really knowledgeable questions to them now. And ask them, can you roll? Is this a roll?
Happen.
Okay, can y'all hear me? Can y'all see me?
Hello.
Host.
Okay.
Hello.
Hey, Clarissa's the host again.
Okay, can y'all hear
Miss
me?
Lou?
Yeah.
Something happened.
Can y'all hear me?
Yeah,
Can you hear me?
Yeah.
I can hear you.
Yes.
Okay, I think it was about the internet.
Yeah.
We can hear you, but we can't see the screen.
Is something wrong with the internet? I was just asking because mine is breaking up or something.
Mine was too. I thought maybe it was just mine.
I thought it was just mine there too.
Okay, I think it was me. And let me see. You can minimize Zoom when you are recording. Okay, so can you guys still hear me and see me?
Yes.
Yes.
Okay, we'll take a few more questions and it's almost our time anyway. So yes, you have some, I think we were saying you have some opportunities to sit down and actually be knowledgeable enough to talk to your HR and the people who are handling your retirement option. They will give you the number and you can talk to those people, and now you can ask them in the event that you left your job, what can you do to move your funds over, or can you roll them over? And that's just a very simple question. So we learned something tonight, right? Okay. A lot of people don't know that. Yes, question. Barbara? Nathan?
Is that what now?
Okay, seemed like I saw
Hello?
one. Okay, it's generally when you're getting ready to ask a question, it's showing me your numbers. So anybody else have any questions or interject any kind of valuable information?
This is Nathan. I think I missed something. Everyone knows what an acorn is, but me, what is an acorn?
What an acorn is?
Because I don't think we're talking about the type from the tree.
No.
No, it's a mutual fund investment. I have it on I Want More. We talk about it, but it's acorns.com, ACORNS, I believe, .com. And you can start an investment through Acorns. I think it's little as $5
It is.
to get started. And I think they have great information about investing that they show on there. And you can put more than $5 in there. Believe you me, you can put more than $5. They also collect the change out of your bank account a certain time of month. All the change that come out of your bank account, even if it ain't but 28 cents, they will extract it from your account and put it into your investments. And I think in 3 months, I think it was, wait a minute, was it 3 months, y'all? In 3 months, I had invested $20 a month. I was testing. And in 3 months, I actually had like something like $83, $85 in there.
Wow.
Yeah. So
Okay.
I thought that was
I
pretty,
like that acorn.
right? Like that acorn. So, and you get a chance to diversify those funds by percentage, just like anything else. So there are several, betterment.com. I use that as an example in our meeting, just going through different ones that are there and that you can look at and that yield great information and great returns on. And so it's easy because it's an app on your phone. There's also another one called Stash, STASH.com. And those are apps on your cell phone, investment apps.
And that's stash.com and acorn.com.
Yes.
Yes.
Okay.
Thank you.
You're welcome.
See
Anybody
what you
else?
learn by just being a part of the group and sharing information?
Yes, I do.
Just lovely. Just lovely.
Well, you guys,
Yes.
if there's no other questions or comments, this is our time. It's 9:25. We give ourselves an hour to have our learning environment to grow. Do we have any powerful testimonies of business growth or personal financial growth that you may have experienced that you want to share real quickly before we get off the call?
I would just like to announce about the community outreach empowerment block party in Fordyce on October 28th. I know you, but you had an event too. Was it one of something for like this?
Yeah, it's in Hope. It's actually a My Econ conference training.
Okay.
Mm-hmm.
But I've been asked to speak, and I'm going to talk about the My Econ principles
Mm-hmm.
there that morning, 9 o'clock. And next time I'm going to check and see what you have going on before I accept.
All right. Well,
But it's going to be an all-day thing. There's going to be activities for the children.
Mm-hmm.
There's going to be drug take back
Mm-hmm.
there. There's going to be vendors. It's going to be a all-day thing, and it's basically about empowerment.
Okay,
About
good.
community
Well, make
empowerment.
sure if there's a flyer, go ahead and put that on our group me. You can put it in I want more. I want more. I want us to share those things and take plenty of pictures and share them with us, okay?
I will.
All right. Anybody else? Any announcements?
Hey, Crystal.
Yes.
Hey, this is Chris.
Yes.
I was just say, but I appreciate the presentation. A lot of times, like I said, I've been sharing things in my business, just upon the strategies through our training. I shared, how my credit score was increasing, and usually my goal was like to pay off debt and do different things so I could have more money to invest even more. But by doing those same principles, paying off debt, look for a way to increase my cash flow so I can have money to invest. I think about the long term, about you said diversified, that not only am I benefit from improving my credit, but I think that's going to open up doors. So when I say diversify my portfolio by having good credit and stuff, then that also allowed me to have opportunity to, invest in real estate and different things where I can save money and use those type of investment by benefiting off having a great credit score with lower interest rate where I can save money and also use that as my advantage and strategy to make money from here on out.
Ooh, Chris, that's powerful. That's what the My Econ concept is all about. We are losing if we are not being aggressive like you have been, baby, because that is exactly what it's about. You got it. You got it. Taking that credit is a tool of investment. It absolutely is. So, you're in a position to go and buy investment property, duplexes in apartment complexes. Yes, go ahead.
And another thing I shared with my team when I was in Mississippi, with Joseph know that it's the good thing is, I like seeing able to use my credit and get credit card, different things where I'm using now the strategy where I'm getting actually, cash back, paid back, where that stuff build up, where I get them paying me and that stuff saving up for a rainy day where I haven't even cashed it out yet. But this knowing that I'm able to pay things how I'm doing it and say, okay, this is what you're offering me because I got good credit to stay with you. So I will use that activity, but at the same time, I get cash back, paid back as well from them.
Right. That's right. That's right. And that's what you call, that's the difference between a cash mentality and a wealth mentality. A cash mentality are those of us who are looking for gratification right now. Wealth mentality thinks like you. We're looking for long-term gratification. What's going to happen 10 years from now? What can happen to me 20 years from now? So everything that I do is not geared towards having my gratification right now, because I'm going to say this. Chris, as an example, here's what he's done. Chris could buy him, or could have been bought him, a new car. Chris paid off his car, fixed his car. Don't look like he Dr. Allen in the car all the time, but he Dr. Allen in his pocket, because it's not the outside that makes a difference. It's the inside. And so I'm telling you, that's why I put he's my golden child. Because ever since we started teaching Chris these principles and showing him, Chris has been nonstop, made no excuses whatsoever. And it's not because he's been better off than any of the rest of us. It's because he had a vision, a written vision, and he's aggressively taking everything that we have shared in my econ and he put it to practice. Good job, Chris. Thank you for sharing that, because that is a great example. And one day, all the rest of us are going to step up and tell how we've taken these principles and worked it in our credit as well. Right, everybody?
Yes. Yes.
All right.
Yes.
Absolutely. Absolutely.
That's
I've
right.
been working on mine too, and it's doing pretty good. Pretty good.
Good job. Good deal.
Yes.
Yes. Okay, so next week, you guys, we're going to talk about, we're getting ready, we're going to talk about dollar cost investment, and we may go to the financial calculators then, and we're going to keep this train moving, and you guys are going to be so smart, you're going to be able to follow Mr. Thomas when he gets to town. Go ahead and encourage everybody, go to your group me, go to I Want More, encourage everyone to go ahead and pre-register. That's going to let me know how many of you are actually going to attend the event and what we have to prepare for it. And get your guests out. Know that you can get guests and you can get them on these phone calls. They can't take anything away from us unless they're going to learn our principles. And so, they got to have these principles first. So you can invite your guests and family and friends to the calls and invite them and bring them to the training in November. All right. You guys, thank you for joining us tonight. God bless you.
God bless you. Good night.
Good night.
Good night.
Thank
Good night.
Good night.
Good night.
Good night.